Cam Sicker here from FMD Financial. Well, it's that time of year again. 30 June is coming up quick and another financial year is coming to a close. So it's time for our annual public service announcement. It's time to review your super, check your bank balance and consider whether you should be putting more money into your super. There's some really compelling benefits of doing this, so let's dive in. So today I'm really just going to be talking about tax deductible contributions. So these are also known as concessional contributions. So essentially, you put more money into your super account and you can claim a tax deduction on the amount you put in. There's multiple benefits here, so let's break it down a little bit more. So number one, you're claiming a tax deduction, so you're instantly reducing the amount of income tax you pay. Number two, your investments within super will generally be taxed less than your investments outside of super. And number three, over the long term, your investments should continue to grow and compound, and it's a really tax-effective way of building your wealth. Now, there are some things to consider. First of all, you don't have access to your super account until you retire, so you just need to be comfortable not having access to these funds. Number two, the annual limit this year is $25,000, and that includes the amount your employer pays into your account. Now, you may be able to put more than $25,000 in and claim a tax deduction using a relatively new rule, but you should check with your FMD advisor because there's some more intricacies around this. Now, this all may seem a little bit complex, maybe a little bit boring, but let's not underestimate the benefit here. So let's go through an example. Let's say you put $10,000 into your super account and you earned between $45,000 and $90,000 this year. The tax benefit to you would be approximately $1,950. So we're talking a near $2,000 benefit for a $10,000 contribution. Now that's a pretty good return on your money straight away. Now, last thing from me, the expected limit is going to go up to $27,500 next year. So that's an extra $2,500. So if you're on a salary sacrifice arrangement, you may want to adjust your agreement accordingly with your employer. Now, of course, if this raised more questions than answers, your FMD advisor is always here to help.